Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Thursday afternoon, we have Chris Dearborn, Managing Director with Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. And Chris, this is pretty timely because we saw a really strong earnings season with the majority of the Nasdaq-100 companies, but it wasn't enough juice to get the index going in a substantial fashion. Do you think a lot of this is priced in at this point?
Well, first of all, thanks for having me on again, Jill. Earnings were actually pretty good. You had pretty much an 85% beat to the upside for most companies. It's been a strong earnings season as expected. And a lot of the run up that we've had was kind of baked in a little bit. What you're looking at now is more of a growth versus value story that we ventured into about 2 months ago. When you're looking at a number of items coming out of the Federal Reserve, Janet Yellen talking about some of her points being talked back on Monday, which led to a downside move. But on the other side, the economic data is pretty good, right? Unemployment's at the lowest it's been since the pandemic started, which gives hope for a strong non-farm payroll number tomorrow morning. And GDP was also very strong here. So it's a mixed emotion. Did the index get ahead of itself is kind of what we're looking at here. And the possibility is it may have gotten a little bit ahead of itself, and a pause is definitely due. But I still think there's some room to run.
All right, and Chris, with that said, let's take a look at your first chart here for some fresh levels.
Right. So last week we made an all-time intraday high on April 29th, 14,073. The index has since pulled back 4 straight days in a row. Today we're bouncing back and forth between positive and negative. The index did open lower this morning, rallied back up towards midday, and now we're kind of waffling back and forth around unchanged. Remember, we opened at 13,600 today. The key driver for this morning, for this close, would be that we close above that level. So that's about 110 points away from where we are now. What is bullish here, though, is that the RSI, relative strength index that we often talk about, is at a low 44. That means it's heading towards that 30 oversold condition, which means that the selling may come to a pause soon, and we can look for that rally. Look for support here at the 50-day moving average at 13,345 and the 100-day moving average at 13,232. Both very close. Could give this index a nice bounce to move back to those all-time highs.
And to wrap up your last chart here, where are the constituents performing?
Again, that tech level with the fear of inflation creeping back in is that more broader story. And you're seeing a number of the larger names being hit by it today. Tesla, Adobe, NVIDIA. You had bookings is down a little bit on earnings, even though it was a strong number for them. Apple, Cisco are both up on the day. T-Mobile's up on the day as well. Facebook has been waffling back and forth, and Costco's having another strong day. So it's really split down the middle. You've got 50 members that are positive, 50 members in negative, and we got about 55 minutes left in the day. So let's see which way we go. Again,
all right, Chris,
right down
sounds
the middle.
Good. Appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.